Welcome back. Whether you are a newbie real estate mom and pop investor or you are experienced investor, what I'm about to share with you is that you can accelerate and scale your real estate portfolio in a way that it'll become very efficient for you long term. My name is Seewing, and today I'm going to talk about buying small multi-unit property and do it very efficiently in a marketplace where many other investors over many years have achieved success, and you can too. Here we go. Let me dive deep into this video. And as I proceed, please, at the end of this video, if you please and share and subscribe to my YouTube channel if you have not already done so. All right. And also subscribe to my email newsletters so you can further learn more about this type of investment methodology. Okay. Thank you so much. And let me share my screen and also share my slideshow. And welcome to Seewing. And yep, you have the potential to buy 1 to 4 units in a turnkey portfolio in this marketplace. And over time, you can scale your portfolio and spend little or no time, almost passive, to buy these properties under your name, 100% yours. No need to do partnership, no need to do syndication. You buy with your own name, 100%. That's what I desire for you guys. And as long as you can have the ability to have a down payment and you do investment loan financing. No need to partner, no need to have a business partner. Which is very risky. I don't like it. Buy under strictly your portfolio, 100% yours. Okay. Or after you buy it, you can put it in an LLC if you wish. That's a different strategy. Okay. So let's move forward. One thing is all real estate is local. There are more than 100 metropolitan statistical areas in the country. There are over 3,000 counties and over 9,000 cities in the USA. I want to caution you, there's no such thing as a national real estate market, and just avoid all those doom and gloom crash porn bros out there. All that systematic conditioning, negative headlines. The housing market is very resilient. It's very robust. And right now we have a historic low supply of inventory and pent-up demand, even at an elevated mortgage rate of around 7% at the date of this video. We're talking cash flow. Cash flow is king. Have cash reserve. Don't over leverage and find the right market and do your research and due diligence. Here's the highlight. Scale your portfolio. The rentals I'm going to show you are appraised properly. They are all off market. They are not on a multiple listing service. They are turnkey. You don't have to waste your time, find the property, manage your own properties, do your own rehab, all those dirty, filthy, time-consuming, labor-intensive investment methodology, which are taught by a lot of those so-called real estate gurus out there. So I don't like that because most of the mom and pop investors, you guys are very busy, working your job full-time, take care of your family, your children, whatever. You cannot do, especially when you live in other high price markets where you cannot buy properties in your own backyard. So you have to go out of state and find the market that have the numbers that works with cash flow, and surround yourself with a team, which we have property management in place. They do everything for you. And you can get financing on these very low purchase prices. I will share with you the numbers. These kind of properties are already pre-leased. Most of them, if they're not, they're rented very quickly. This is a robust rental market and have been for many years. And you're working with a turnkey provider. They have more than 20 years of service for out-of-state investors here in Buffalo and Niagara Falls, New York. So you can invest out of state remotely, passively, and successfully. Okay. Our investors, a number of our investors over the past years have purchased with this turnkey provider in this market, and they have done very well. They have even received a significant amount of appreciation, believe it or not, in this Midwest market investment methodology. and their rental income has increased the last few years as well. Wow. So, and of course, these kind of low cost price investment properties are normally, if you buy in the other Midwest market, it's very hard to get financing. But in this particular market of Niagara Falls in New York, you can get financing even on a price as low as $40,000 to $50,000. You can still get leverage with financing investment loans that will give you a higher return and very low down payment relative to the return that you are getting. And so another value add. So we have a lender that can do this. As you can see, this individual that can do small investment loan financing, which most lenders are not willing or unable to do. That's the power working within our network. And furthermore, a lot of you may not be aware, Realtor.com, the top 10 real estate markets in 2023, have listed Buffalo is number 5. Go figure. And of course, the source Black Knight Home Price Index of Wall Street Journal recently have put in an article of the top markets, and Buffalo is right up there along with the other trophy markets, if you will. And here are the growing markets. The Midwest, which is Buffalo, New York, is part of the Midwest type of scenarios. And of course, Southeast, in particular Florida, has been a robust market at this moment, where the West Coast markets are going through a little bit of a housing correction. Again, best places to live in the U.S. are Buffalo is one of them. As you can see, all these tremendous third-party metrics, which is it bodes well for investors who wish to purchase in this market. Now, this property from the outside may not look all that great, but it's all about the foundation. It's all about the bones of these types of property. I know they're very old. There are 60, 70, 80,000, 80 years old, but as long as these houses has been rehabbed from time over many years back and forth. So it's a very good bone. It's a turnkey. It's properly fixed up by our turnkey provider. So very little worry about that. Everything, the roof is relatively new, few years new. The electrical system, the boiler has been updated. We have replaced in recent years. You're not going to see, hopefully, you're not going to see major repairs that can impact your cash flow down the road. The best you can expect is cosmetic repairs from time to time. That's pros and cons, but the pros outweigh the cons quite significantly. As you can see, they can rehab very nicely. This turnkey provider are able to buy materials at a heavy discount because they've been doing it for so long. To the local Home Depot, they get the materials there and they get significant discounts. And consequently, the discount has been passed on to our retail buyers, so we can buy this property essentially a little bit below market value. Isn't that amazing? So as you can see, all of these rooms, each house has been properly repaired to a very good status, so the tenant can live there very comfortably. And here's the amazing properties are available on a monthly basis. They are very desirable. This marketplace, this turnkey provider have repeat buyers from all over the country over many years and in overseas. Many of the buyers overseas that came from Israel, Lebanon, UK, Australia, and they come into this turnkey provider and buy it all cash, okay, on sight unseen, because they know the return, they getting the turnkey process, they're getting the property management, they're sending them the checks every single month. Also, it's truly an amazing auto machine robotic cash cow, if you will. I'm showing you some pro forma, if you will. I'm not going to dwell on the numerical return. They are way above the benchmark up the right-hand corner right here. Rent to value ratio, cap rate, cash and cap return, or way above a historical traditional investment methodology. I know if you're a newbie, you may not fully understand what these numerical formulas mean, but are subject to another video that and what have you. But needless to say, suffice to say, the numbers are way, way good. This single family home or turnkey rehab, most of the time it has been rented. It's This property is available, $67,000 only. You put 25% down payment, even with an interest rate of 7 to 7.5%. Look, when you buy small properties, the difference between mortgage rate of 7% versus 5% is very insignificant, because if we're talking a $67,000 property, so the monthly cash flow is only going to be $20, $30, $40. I get it, right? But I'll share this concept with you. You date the rate, you marry the house. I will elaborate on that concept momentarily later. But with a mere only 20 grand, total out of pocket, when you finance and the closing costs, you get yourself a $67,000 property. If the gross rent is estimated $825, so you minus all your monthly debt, service and obligations and mortgages, at the end of the day, you still cash flow $143 monthly positive cash flow. And just we're talking only about the first year cash flow. There's only one component of your profit multiple income stream. I will share that with you. When you buy a rental property, there are 5 ways to make money, not just the first year cash flow. All right, second property available to you. This property is a duplex. Again, right? I mean, it's a turnkey. There's very little research and due diligence. If you do it yourself, if you want to buy your own property, come to this market on your own without any team, a trusted team to help you, will spend years to do research and due diligence. And even then, you may be reluctant to take action without this platter present to you. We have done, this turnkey provider have done in Buffalo, have done most of your research and due diligence for you. They know every single neighborhood, every block. They wouldn't sell you a property, which is they wouldn't personally own themselves, to how reputable and transparent and ethical they are. So what more can you ask for? Ordinarily, when you buy out of state, especially the Midwest type of property, older properties, there's a lot of risk associated with that, but your risk has been substantially reduced, not 100%, but almost 100%, if you surrounded yourself with a turnkey provider that has been in this market for 30 years, who has been producing year over year, month over month, day over day. And there's a reason why they get repeat buyers, because the buyers are very satisfied with their purchases, and they have additional money. The buyers, the investors will come back to buy more. That has been the experience. Is this market perfect? No. Will there be some issues over time? Yes. There will be vacancies, 1 month to 2 months vacancy potentially per year. Yes, that's factored in my numbers. Factor in all those vacancies and maintenance associated with this. Is, by the way, it's an older property, but at the end of the day, because of the overwhelming cash flow and the potential appreciation, 2 or 3, 4%, the numbers and the benefits far exceed the risk associated with buying this type of properties. Does that make sense? I would love you to comment below, share with me what are your thoughts. Where do you live at? Do you have a monthly down payment of 20 grand available? You have good credit. Can you possibly do this to put $20,000, 25% down payment, even at 7.5% mortgage rate? Currently, you can always do the rate buy down, whatever the scenarios. But at the end of the day, you have yourself a duplex, cost only 80 grand. What other areas in the country you can do something like this? And you get a rent on both doors for $1,000. You minus all your monthly obligation, including your mortgages. At the end of the month, you still get approximately $280 monthly net cash flow, not including all the additional benefits associated with owning a property, which I will clearly show that with you toward the end of this video. All right, so this duplex is available. This week, by the way, they go very quick. People buy this kind of property from out of state using all cash, using pure cash, or using their self-directed IRA, or they can do financing with 25% down payment. When you buy a duplex or higher, you need a minimum of 25% down payment on a Fannie Mae lending guideline loan purchases for investors. All right, mind-boggling numbers. Another duplex, this one a little bit more expensive, but Still very good. This is the third listing. Again, 25% down payment, like 35 grand total out of pocket, not just a down payment. And these two blocks are rented at total on two doors combined, 1625. And then you do the financing, you do the crunching of the numbers. And then at the end of the day, your monthly net cash flow is $417, which is a very attractive number. But you can refinance a couple years later from 7.5% rate, whatever projection, to 5 to 5.5%. Your monthly cash flow will improve by several $100 from the current projection of monthly net cash flow. Does that make sense? All right. Hopefully it does. It's a good high value add property. And the fourth property, again, fourplex. Imagine you are newbie or you're an experienced investor. You can do this, right? Because the turnkey process will allow you to bypass all the inexperience you may have from your past background, because this one-stop shop turnkey provider through our sources can help you efficiently buy without doing too much more due diligence and research, because this is what you get. This company, they know you're from out of state. They know what it takes for you to take action, because everything has done for you. This fourplex at only $113,000, all the rehab costs. You don't even have to pay. The turnkey provider will absorb their money to rehab the property up to standards. So you can buy this turnkey most of the time with the renters in place. If that rent is not in place, it's very easy to rent this out, because for Niagara Falls over the years has been a robust rental market, regardless of the economic conditions out there, what you've been hearing, or all the negativity, volatility, whatever. It does not affect this hyper local real estate marketplace for investors. You clearly understand what I'm trying to say. Look at the numerical returns on the upper right-hand corner is really attractive, way above the benchmark. So 25% down payment, even at a mortgage rate of 7.5%, your down payment to buy this fourplex. That's how you scale your doors if you want, right? You can easily, of course, you need the down payment, all that stuff, and you can easily scale this portfolio quite quickly. Not everybody can do that, but you had a lot of courage and inspiration, perspiration, whatever, to make it happen. But other investors have done it before you that have achieved a tremendous scaling of the portfolio within a short period of time. Some people take longer to buy this kind of property on a systematic basis. At the end of the day, on this very high value fourplex turnkey or rehab property, you buy at this volume, $113K. Your down payment is less than 30 grand total out of pocket, not just down payment. And then this 4-door rent for total of $1,650, $450 per door, something like that. At the end of the day, even with a mortgage rate at a high level right now, you can still have achieved monthly net cash flow of approximately $616 monthly. But look at this amazing rent to value ratio. Anything close to 1%, you have a winner. And of course, anytime a capitalization rate or above a double digit, you are a pure winner. We have a cash and cash return of 22%. This is mind boggling. Again, some of you are over your head. You don't understand these numerical formulas. Don't worry. It'll be explained to you later. All right. Very good monthly net cash flow, which is very amazing property. Fourplex for $113 grand. In California, you couldn't get a garage door for $113,000, let alone a fourplex. So that's why buying in a specific local market is critical to your financial success. And that's the listings we have for this week. And I want to go back to this. Some people may not agree with this concept, but clearly there's a lot of misconception out there. The way I define date the rate, marry the rental house at 20 to 25% down payment, you already have the LTV, loan to value ratio, to qualify to get financing. But right now you're buying at a higher rate, which is fine. Okay, you date the rate is negotiable, the rate fluctuates, but owning the house permanently That's the foundation. When you marry the rental property to the long term, you can reap multiple layers of benefit, which I'm about to share with you momentarily. Suffice to say, we don't know the future of the mortgage rate, let alone the real estate market, but things are looking very good for the foreseeable future. So even when the rate fall to 6.5% to 6% to 5.8%, whatever, then be prepared to refinance all your loans so you can achieve more cash flow than you're already receiving right now. And the hits keep coming. Finally, many of you have not heard about this, especially newbies out there. You don't understand the long-term benefit of owning income property. And I'm saying this, rental property historically is the most attractive, powerful, tax-favored, and proven multi-dimensional real estate investment asset class is the world's greatest wealth building vehicle. And in addition to cash flow, you have to think big picture. You not only buy the first year cash flow, you buy rental rates increases in line with inflation 3, 4, 5%. You expect to raise your rent from year to year higher. So therefore, your passive income will be even improved greater over time. So you have to buy property for long-term, buy and hold, and show the discipline and commitment to stay the course. Don't panic, regardless of the housing market condition. As long as you collect the cash flow short term, while the volatility of the market, work yourself out, knowing that we can always get renters out there. Right now, we're experiencing the highest level of renters in history because a lot of people cannot afford to buy a house these days. We all know that. So they are becoming renters. There are more renters than ever before in history. So that bodes well for you as a landlord real estate investor. Does that make sense? Of course it does. And of course, tax benefits. I think consult your tax advisor. When you buy an income property, you have tremendous amount of paper, write-offs, depreciation, passive losses, cost segregation, bonus depreciation, all this amazing. I know everybody's situation is different, but needless to say, all of you have the ability to achieve very good tax benefits. Okay, of course, real estate, you invest 7, 10 years or more, will always go up in value. Don't let anybody fool you out there. When you buy for long term on a historical basis, real estate always increase value anywhere from 3 to 5% to 7%, depending on where you invest, what market. But over time, the magic of compound interest, the magic of appreciation, equity growth. If you invest long term, you will make money. You will gain equity of your property. So that is history. For those who fail to follow history, will or doomed to repeat the past, something like that. And of course, the power of a 30-year fixed rate mortgage. Nowhere else in the country get this kind of. No one else in the world, that is, have the American way of getting a 30-year fixed rate mortgage. It never goes up. Tremendous amount of leverage. When you leverage your assets, when you leverage buying properties at 20 to 25% down payment, your return are higher. You get more yield, more return. So the power of leverage, the power of using debt, mortgage debt to leverage your real estate portfolio is one of a kind. It's a great value add proposition. Don't let anybody tell you otherwise. So 4 ways to make money, not just cash flow. So think big picture, think all those kind of things. I'm not going to talk about the other additional benefits you can experience by holding the rental properties, but on this screenshot, just pause the screenshot and just digest additional scenarios you can negotiate within each and every income property you have. All right, all these additional benefits. So on your own, as I conclude this, all right, here we go. And then again, this is our primary lender is willing to do any kind of low price loans, and you cannot say the same thing to other lenders out there. So everything's value add. I know there's a 10-year performance projection. You have to think, you have to use the software, calculate the annual return, the rent growth, and the whole appreciation. You're outsourcing your debt obligation to someone called the renter. Your renter gonna make you rich. All you need for the next 7 years, or 3 or 4 or 5 renters in the next 10 years. That's all you need. And your renters, your tenants, going to make you rich. Why? Because the gross rent you collect, they're going to pay all your monthly debt obligations and then some. And then the property increases in value. Your loan balance get paid down by the renter over time. You have more equity position as your loan balance gets decreased systematically over time. And then your profit, your equity, your cash flow continue to increase over time. So stay the course. That's why you can become rich. So regardless of where you live, where are you living right now? Tell me, comment below. What's your situation? Are you ready to become an investor, or you're a newbie, or you're experienced? Even if you're a newbie, you can do this because you are surrounding yourself with a great trusted team. They have done everything for you, property management, the whole 9 yards. Doesn't matter if you live in the Bay Area, California, Southern Cal, Pacific Northwest, Northeast, where the average home price is at least $700K. So you have to step out of your comfort zone to buy turnkey, very low cost properties in the Midwest, and with a very high rent to value scenario. You buy for cash flow initially. However, over time, you can experience other types of growth, as I stated on here. Long term, prices will always goes up, except 2008 housing crash. I experienced this up and down cycle because I've been investing for more than 20 years, and I help many investors invest to buy turnkey properties in the affordable markets in the U.S., which is Midwest and South and Southeast. As you can see, more real estate millionaires are being made through real estate than any other type of asset class. If you want to be in this top category of wealth builders, you buy your first rental and continue on to over time to build on your real estate portfolio. That's the bottom line. All right. As I leave you right now, you see a lot of value. Please comment below what's your situation. Can you come up with $27,000 finance a property? It's not that hard, right? Then after that, after you enter real estate game, then over time, the property hopefully increase in equity. You can cash out refinance. You can to pull the equity out, to use the equity to do a tax-free cash out refinance to scale and buy more properties through the equity refinance. So it's just amazing, but it's a long-term game. It's a long game. You're not going to get rich overnight. Don't listen to any realistic guru out there that can promise you the sky. Anyway, so at the end of the day, that's all I can say. So if you see value from this presentation, please smash the like button and subscribe to my YouTube channel. I mean, a lot more subscribers, as you can see. Also, subscribe to our email. Put on my website below. Enter your email, so you can become an insider. And so you can become a free member of our real estate investment club, and our community of several thousand investors. You learn free real estate education through your email on a weekly basis. So ultimately, you can become a wealth builder by taking action, buying this type of real estate properties in various locations for you. Thank you so much. This is Seewing. I'll see you on the next video. Have a nice day. Bye-bye.